Hey YouTube, how is it going today? In this video, I'm going to be doing my M1 Finance account review for the month of May 2021. Now, if you're new to my channel, I've been trading and investing for over 20 years, and in every video, I'll show you some of the potential trades and investments that I see setting up. So if that's something that interests you, please consider subscribing to the channel so you don't miss any future trading or investing ideas. And I also have a Patreon group, so if you would like to be a part of our community and see what we are buying and selling in real time, that link is in the description. If this is your first time watching this M1 account update series, the objective of this portfolio is to reach an account value of over $100,000 and $500 a month in dividends by the end of 2025. The rules for this account are: I make two $100 contributions a week and an extra contribution on days when the S&P 500 closes down more than 2%. Usually that contribution is also $100, but sometimes it's more depending on the market conditions. The reasons why I make that extra contribution on big down days is because studies show that in the past that will increase your portfolio's return by double digits in the long run without adding much more money. Now, I'll link an article in the description explaining why that is if you want to know more. I know these are lofty goals, especially on the dividend side, but I'd rather have high goals and miss them than low goals and hit them, right? All right, everybody, let's get into my M1 Finance account update for the month of May. This is actually the second week of June, so I am running behind on this. This summer, I'm behind on everything, and I'm going on vacation again this week, so that's going to put me even further behind. But anyway, better late than never, I guess. So in my last video for last month, the account stood at $22,451, and right now it is at $23,996, and my money-weighted return is slightly over 100% at 103%, and this account is roughly 17 months old. I started this at the end of November 2019, and one thing I did want to point out is, there's a lot of talk out there that the market is overvalued, and I tend to agree with a lot of it. But, I started this account only about 4 months or so before probably the fastest sell-off in market history. So, I bought not soon before a huge market crash, and it wasn't long after I opened this account, after the market rolled over, I was staring at pretty big losses. But I continued to invest, and I continued to buy extra on the big down days. And you can see it did not take long for this account to get into the positive, and now I'm up a pretty decent amount. And that's the beautiful thing about these M1 Finance accounts and dollar cost averaging. You don't have to worry about calling tops or calling bottoms, but you just continue to invest every week, and when you get those opportunities when the market is crashing, you just add a little bit more. When the market is crashing, I like to take a long-term view of the Dow Jones Industrial Average going back 100 years or so, and you can see every single big decline was bought up eventually. So as long as you continue to buy as the market is rolling over, you're going to be fine in the long run. But that's why I absolutely love this M1 Finance account, and I think this should be the cornerstone of everybody's investments. This is just a great tool for building wealth over the long term. Now, I love to trade. I'm going to trade until, the day they throw dirt on my ass. So I don't think trading is for everyone, but I think this kind of investing is. But anyway, let's get into this account. Let's take a look at the last month. And we can see for the last month, the account gained $871, and the return was just under 4%, so a halfway decent month, and I earned about $26 in dividends. So the dividends are starting to pile up, and I look forward to another year or two down the road when they really start to get big. But let's scroll down to the holdings really quick. Let's actually look for the total, the biggest gainers for the month, and last month, my biggest gainers were Snapchat, Square, CRISPR, and Tesla. Or actually, I think it was AT&T. And AT&T I'm going to talk about later because that was probably had the biggest news of the month. But we can see the biggest gainers for this month have been CRISPR up 22%, Palantir Technologies, which is also up 22%. And last month I added Palantir to the portfolio, and I said I started buying it, I think, when it was in at the lower 20s, maybe $22 a share or so. And I said if it dropped below 20, I would add more aggressively, which I did. And you can see Palantir bounce back up. I think right now it's trading right around $24 a share. So it's doing pretty well so far, and I think I started it at a 3% weighting, and once it dropped under $20 a share, I raised it to $40, so it was buying more aggressively when it was under 20. So you can see that's paying off with Palantir. Snapchat is my third biggest gainer, and that was my number one biggest gainer last month, so Snapchat is doing very well for me. Illumina had a nice rebound. This one had been pulling back, but it had a nice rebound, was up 18% over the last 30 days, and Carnival Cruise Line continues to be one of the better performers the last couple of months as people are starting to buy some of these reopening plays more. But let me scroll down and just round out the portfolio. You can see the ARK K Fund was up almost 10%. Simon Property Group has performed very well for me. This real estate investment trust, I was buying a lot of it when it was just at the lows of the pandemic sell-off, and man, I think my return on this one, as far as my yield, is, I think it's right around 7% total. Right now, the yield on Simon Property Group, I think, is right around maybe 4.5% because it has the price has gone up so much. But definitely glad I was buying a lot of Simon Property Group near the pandemic lows. Then we will follow it up with Uber, the O Realty Income Corporation, Grow Generation, Peak Health Peak Properties, Goldman Sachs, Microsoft, Skyworks Solutions. You can see almost everything was up for the month. Apple was up 1%. JP Morgan Chase. I have the Vanguard Total International Bond Fund, which is up 1%. I have the Vanguard High Dividend Yield ETF. So this is a basket of higher yielding stocks. So I like having this one in there for a little bit of balance with my dividend stocks. Next one is 3M. We have Square, which was just about flat, even though it was one of my biggest gainers last month. Following with Waste Management, Dominion, Tesla was down slightly, Baidu was down slightly. Now we're getting to the ones that were lagging. You can see the list is not very large at all. LTC Properties was pulling back some. Verizon Communications, Disney, Alibaba, then AT&T. And actually, let's go to the top and look at my biggest losers for the month. And of course, the biggest loser was AT&T. And the big news with AT&T was that they announced a deal to combine their content unit, Warner Media, with Discovery. Now, under that agreement, the AT&T shareholders will receive stock representing about 71% of the new company, with the Discovery shareholders owning the final 29%. And of course, this is all depending on the approval by the regulators, but the consensus view appears there will be no issues there. So, a lot of people were selling off AT&T on this news because AT&T is going to be cutting their dividend with this deal. Their dividend right now is right around 7%, and it looks like it's going to be cut down to approximately 4.5%. I have not sold my AT&T yet. Most of the people I hear talking about this have sold out. There are a few that are still holding it. Now, this deal is not going to be completed until sometime next year, so they're going to be continuing to pay that same dividend, which I said before, likely right about now it's about 7%. So I'm continuing to collect that 7% dividend. But with AT&T cutting that dividend right around 4.5%, their dividend is going to be the same as Verizon. So it doesn't really make a whole lot of sense to have two companies that are pretty much identical with identical yields. I'm probably going to end up holding Verizon and probably getting rid of AT&T eventually. I want to see how the market reacts to this. I mean, the market already had a big sell-off, so there's no point in selling right now. I think AT&T should rebound because I think this deal is actually pretty good for AT&T, but I know a lot of people are just in AT&T for the dividend, and that was most of my decision for getting into AT&T, I just wanted another high-paying dividend stock. I thought they had some pretty decent growth ahead of them with the the boom in 5G, but I think I'm probably just going to end up dipping out of AT&T and just holding Verizon and getting into another high-yielding stock or REIT. But my biggest loser, of course, AT&T. Second was Alibaba. Third was Disney, and then you have Verizon right after that and LTC Properties. So I really like Alibaba for the long term. I don't think that these issues they're having with the regulators or possibly the United States delisting Alibaba are going to come to fruition. I think it's probably going to be a buying opportunity. So I raised my holding in Alibaba from 3% to 4%. So I've been buying Alibaba a little bit more heavily since they've been pulling back, and I think that's going to pay off in the long term. But those are my losers for the month, and you can see the account has done pretty well. Now let's get into the charts now and take a look at some of the charts of the biggest winners and biggest losers and see if we can determine what could be happening for this next month in them. All right, well, let's take a look at some of the market averages charts first and see if we can determine where the overall trend of the market could be heading in the next several weeks or so. I'm only going to be looking at the weekly charts. There's no need to look at the daily or intraday, obviously, with the M1 Finance account because this is a long-term investing portfolio. But I'm going to start with the weekly chart of the QQQ, which, of course, is the ETF for the NASDAQ. And as we can see, this thing is an absolute thing of beauty at the moment. We can see it's making a bullish triangle formation, and these are almost always breakouts to the upside. So hopefully by next month's video, we will have a nice clean breakout to the upside in the QQQs. Let's jump over and take a look at the diamonds, which is the Dow Jones Industrial Average. We can see this one is still in a healthy uptrend. It's above that 8-period exponential moving average, so there's no need to get worried as of right now, and it's not super extended above it, so there's no need to worry about a huge sell-off, at least not by looking at this chart. And the next one is the spider, which is the S&P 500, and we can see the S&P 500 is actually into new high grounds as I'm making this video, so very healthy looking chart on the S&P 500 as well, and the fact that it's not very much extended to a new high also bodes well for a continuation to the upside. So as far as the S&P 500, the NASDAQ, and the Dow Jones Industrial Average, I think they're still looking very healthy at the moment, and there's nothing to indicate that there could be a huge down move in the market before my next M1 video. Of course, anything can happen, but things are looking pretty healthy at the moment. All right, well, let's get into my best performer for this month, and this one was CRISPR Therapeutics. And let's go back to the daily chart. And we can see that CRISPR Therapeutics is making a very nice rounded bottom. I was accumulating more of CRISPR as it was pulling back because it fell below my target weight. So that's what M1 Finance does. It buys the pullbacks in stocks. When stocks are pulling back below your target weight, that's when it starts adding more. So if CRISPR goes on a nice run from here, which it could because it's breaking above that 200-period simple moving average, and that's a good sign. If it goes on a run from here, I should do very well in CRISPR, because I was accumulating quite a bit over the last several weeks or so. Now, my next one that was my biggest gainer was Palantir, and I've been watching Palantir for a while. I started adding right around, I want to say maybe it was, probably right around here or so, and it said if it dropped below 20, which it did just briefly, I would pick up the pace in Palantir and raise the target weight, and that ended up me buying quite a bit when it was under $20 a share, and you can see it's already rebounded, and it's testing that resistance area that I have drawn on the chart, and hopefully by next month's video, it'll be breaking through this resistance area. It looks like it could be starting to do it already, so we will have to wait and see how Palantir does around this resistance area. It's been butting its head up against it for the last several days or so and can't seem to get past it. But the more pressure it puts on that resistance area, the greater the possibility it's going to eventually end up breaking through it. So I am very encouraged by the price action in Palantir, and I'm glad that I was accumulating it, and I'm glad I added it to my portfolio. I do think they have a very bright future. If you want to know more about Palantir, I do have a video on Palantir that I'll link that at the end of this one if you guys want to see it. The next one I want to show you is Snapchat. Snapchat was my third best performer for the month. And we can see Snapchat is poised to just break through this resistance area that it's had right around $65 a share. So this one next month hopefully will be much higher as well, and will also be on my biggest gainer list because this is a beautiful looking chart pattern. And I don't know if you guys saw any news on Snapchat, but they released a video on their new augmented reality spectacles. Those things look pretty cool. So I think that is going to be a good revenue driver for this company in the future. I mean, it's still early on with that product, so there still needs to be some revamping to it, some refining of that product, but I think it's going to be pretty cool. I think it's going to be a big revenue driver for them in the future. And the last one I want to show you is Illumina. Illumina is also making one of those nice rounded bottom formation, and I was accumulating more when it was under $400 a share. Right now it is climbing up to $450. So hopefully Illumina can continue its uptrend. It looks like it's starting to get a little bit extended, so I would actually kind of be surprised if it didn't have a halfway decent pullback. So by next month they probably will not be on my biggest gainer list, I would guess. I mean, this thing could end up just continuing to scream higher because their last earnings announcement, when it had this big run up, was they had some pretty nice earnings. So hopefully their earnings surprises to the upside continue into the future, and if it does, this is going to be a very nice holding as well. Now let's get into the laggers of the portfolio. First one I'm going to talk about, of course, is AT&T, and they had that deal when they announced that they were going to spin off their content part of their business with Discovery, and the stock looked like it was finally starting to break out of this long-term consolidation. Started to get going. I was very encouraged by the chart when it started getting into the lower 30s, and then that deal was announced and just had another big sell-off and ended up right back into that long-term consolidation again. So this is one of the main reasons I haven't sold yet, because as far as the chart goes, there's nothing really super important to be worried about right now, except maybe this huge gap down on the big volume. But I didn't make a move when it was selling off that day when they announced the news, so there's no need to be selling off right now unless you just want out of it completely. And I haven't made up my mind yet. I think I'm probably going to sit tight, and if they do end up breaking below this consolidation level, I probably am going to liquidate the position and just look for something better. But they're still paying a decent dividend, and there are a lot of opinions out there saying that this is going to be eventually good for AT&T. So there's a lot of conflicting opinions out there. As far as I'm concerned, I'm going to sit tight and see how the stock reacts, at least for another couple of weeks or so. But if it breaks below this consolidation, then I'm just going to cut ties with AT&T and move that into something else. Now, my next biggest loser was Alibaba. Alibaba is trending down and is still trending down, so I'm continuing to accumulate more of Alibaba. But I do think once this news about them potentially being delisted from U.S. exchanges gets resolved, I don't think they're going to end up being delisted from U.S. exchanges. I could be wrong, but I don't think it's going to happen. So I'm going to try to take advantage of this pullback in price and add to it, because I think before long it's probably going to be on another nice looking uptrend, because their earnings numbers are just fantastic. This company is continuing to grow at an enormous pace, so I think that these are bargain prices for Alibaba right now. So I'm going to continue to buy Alibaba. Now, my next biggest loser was Disney. This is kind of a surprise because I thought that they were going to continue higher, because they are a pretty strong reopening play for the economy, and I think once Disney gets everything up and running, I mean, they're just going to be a cash machine again. Once the cruises gets going again, once all of the parks start reopening, I think Disney stock is really going to start screaming higher. So I've been buying more on this pullback. And the last one of my laggers was Verizon. This is probably I don't know if it's a sympathy play on AT&T. The news obviously isn't related at all with Verizon. So Verizon just continues to be stuck in this long-term consolidation. And I think if they do end up breaking out to the upside, it probably will end up being a multi-month to multi-year run to the upside on Verizon. Just because it's just a beautiful long consolidation going all the way back to 2018. So the longer the base goes, the bigger the breakout, and the higher it tends to go. So I think AT&T will break out to the upside eventually, but I will continue to collect that decent dividend until they do. All right, guys, well, that's all I have for this video, so I'm going to end it right there. But if you have any questions about any of these stocks, or if you have any other stocks you want me to take a look at, please leave them down there in the comment section. I will get to them as soon as I can. If you enjoyed the video, please hit the like button for the YouTube algorithm and subscribe to the channel if you haven't already. Thank you so much for watching my video all the way to the end, guys, and until next time, take care.